May profits be upon you. Excuse me. Excuse the noise. I'm moving my mic a little closer to me. Uh, you see this trade? Uh, I should have put this out as it was setting up, but it is what it is. I'm going to let you know why I entered it because I think that's more important. So we can catch the next one. You see the structure that led to this, right? If you go down to the 15-minute, that is not necessary. All right, you can see how price pulled up. Uh, uh, we have a swing low up to the swing high. Very nice impulse to the upside, right? After an impulse like this, you would expect some sort of correction, all right? And we did get a correction. Price started making these lower lows or lower lows, and it looks like we made a nice bull flag, right? Just for price to come up. But you would expect something like this, with a breaking and taking of these highs and the liquidity right beyond them. So, uh, but you don't anticipate, you react to what price gives you, right? So, what did I see up here? All right. So, this zone here, right? This unmitigated zone of supply. It was mitigated, excuse me. It was mitigated here, here, and then price fell, right? All right. Now I'm looking for a chain to start to build. All right. From here, we had a very precipitous drop. I'm looking for this connection. All right. When I say a chain, I'm talking about a supply chain. And that supply chain stretches all the way over. And we can see the mitigations into this zone of supply, right? And we can start to see how price fell from here, all right, leaving these equal highs up here. And you can see how price rejected and fell. Now, this is very important. This is a V-shaped recovery. All right, price is going price when price makes this formation, it's probably going to shoot for the highs. All right, to take out that liquidity. All right, and I'm thinking that's the whole time as price impulses up here. I'm thinking that the whole time. Now, this was interesting. This little pullback here. What is this? About a 35% pullback, right? In the big scheme, like 1 hour or whatnot, you're looking at this whole thing as an impulse. But this pullback for me becomes a little important, a very important. Why? Because it shows price uh, uh, created this range, this swing high, this swing low. What did we accomplish with it? We swept all of this internal liquidity up to this point, right? And we established this zone of supply, right? And uh, price actually went up into that zone, and I didn't think it would hold because of how deep this wick went up in there. But we did get this reaction, right? And as price pulled back, I recorded that reaction because I say, all right, I'm always looking for a flip. If price, if supply fails, I'm looking for where demand took over, of course, right? And you know, we have this zone here. All right. Now price comes down into it, right? And it could come all the way down to here where this is the unmitigated part. All right. But this is the range of price. That's why I have it here. That's why I have it here. Price comes down, doesn't reach the 50% mark of this demand. And you see the push. All right. So this zone, this area becomes pretty important to me. That's why I move my fibs up a little bit. I put the fib here, and this becomes a new leg of of the impulse. All right, this is a new leg of structure. All right, so now I'm looking at where could price pull back to. All right, we've reached the top here. It started topping off here. That's why I put out the fib, and you can see right around this area, all the way across, you can see We've been, it's been a lot of interaction here, right? For both supply, I mean, for both demand and support and resistance. All right, price likes that area. All right, and if price comes back down here, this is where I would be TPing. Right, just so happens to be at the 618 golden ratio. All right, I want to see price come back below the 50% of a trading range, and I have this as the top and bottom of this trading range. All right, on the higher time frame, I'm letting you know. On the higher time frame, on the hour time frame, this is the trading range. All right, and this is the 50% area. All right, I need price to come back to below that 50% area so that we can get a better price, the best price to take loans. All right, if loans present, set up for loans present. Anyway, why did I enter here? All right, getting to that. Once price reaches up here, immediately I go to my lower time frames. What am I looking for? I'm looking for a change of character. I'm looking for price to show that it wants to go lower. So as price comes up, all right, we see we make a high, we make a swing back, a swing back, a swing low, another high, a swing low up here. Great. Now I can see this is all part of the same up move because each candle breaks the high of the previous candle. All right. And I'm looking at that when it comes back down here. We just broke that lowest wick, just broke that lowest wick. So we have a change of character there, right? But I'm still watching. I'm still watching. I'm not looking to get in anything. I'm looking at if price reacts at a point in this leg of structure, where it looks like it's not getting past it. Price comes up and then does that. Then I'm saying to myself, hey, we might have a situation where a setup is happening. All right, I'm not going to just take the earliest indication that price wants to change direction. That would be a mistake. So I still observe as price builds up, builds up. All right. Are we respecting that high? Well, we broke that high right there. Okay. And you can see I have a line here. This is where price took out, swept the highs, uh, the previous highs over there. And that's very important. All right. Because I need to see a sweep of the buy side liquidity before I can expect to see some some declines in this market. I always look for the liquidity. You got to follow the liquidity, people. You have to follow the liquidity. All right. So price comes on over, takes that high out. As soon as it takes that high out, I'm paying attention. My antenna is up. What am I looking for? All right. I'm looking for, is this high going to be taken out? All right. Price pulls back. It's low. I'm paying attention to as soon as the high is swept. That's why that orange line is there. We broke that high. All right, we broke that high, and now I have a swing low, the swing low that's responsible for that high. Now I'm looking at that as my break point for to declare that price is changing character, that it is changing from a bullish momentum to a bearish one. All right, but we have to respect the high now. All right, so we finally make it down. We break that. We break that low, that swing low. All right, my antenna's up. All right, we push. We push up higher. We have another swing low. We push higher. That's why that orange line is there. All right, what am I looking for? I'm looking for that swing low to be broken. Aha! Two candles, one candle later, we do break that candle. We do break that low. Not only did we break this low, we broke the original low. Right? That's two areas where prices broken short-term lows. That's two areas where prices changed character. For me, all I need now is price to respect this leg of structure, to respect this high. Price did that, showed the rejection optimal entry. Put your stop loss above the high of the where you had your change of characters marked, the high that's respected and protected, and let the good times roll. I mean, right now, if you was on this, if you was on top of your game, you would be seeing. Come on, man, why did you do that? You would be seeing some nice profits. We're at price got down to 7R, and I'm telling you right now, I believe it will go further. Yep, it's going to go further. Maybe this 16R, maybe we see 25R. All right, down to this area down here that we already went through, this demand zone. I think this flip is going to be uh, pretty hard to get past, and because it might be a challenge to get past, I said, this be more than enough to satisfy me. All right. Anyway, I hope you like that breakdown, man. I hope you learned something from it. If you have any questions about this change of character, the breaking of short-term lows, breaking two short-term lows is price demonstrating to you that it wants to go lower. Okay, that's all I'm saying. You record it, you record the high that is broken, and then you record that low that's responsible for that high to see if that gets broken. All right. If you get it twice, that is a double confirmation entry. Take it. Take it. Take it to Profitsville. Okay. Anyway, uh, so that's the breakdown. Give me some feedback on this, people. All right. And make sure you hit me with a thumbs up and a like, because, I'm just a guy that's just trying to share what he knows, share my experience. I'm hoping that you do the same too. See you in the next video.